All right, guys. Good afternoon. Christian Farmers Traffic and Trade Group and Web Goal. Hi, Web.
Hello, how are you?
Good. We're going to try to do, we try to do these every couple of months where we review the market webs, especially Web and I like to do this in the beginning of a month because we've got a new value area. And sometimes that could really kind of give us some pretty good clues about at least how we're going to start the month. So we're going to walk through a couple of these things. Um, First of all, just risk disclaimer, standard risk disclaimer. Everything that Web and I are going through is for information purposes only, not giving out any advice or recommendations. Please read the full risk disclaimer right there. Looks like Nike's out. Oh, it was green. Now don't look. You look too fast, or don't look away, or whatever. Now it's red. Yeah. So in any event, I put their numbers, but uh, yeah. Yeah, they've actually advanced pretty nicely from the last earnings report that they've had.
Yeah.
Um, Almost came up and filled that gap. So, but tricky. What do you want to start with? Send your web.
Oh gosh, I think you need to catch me up. Let's start with the majors. Yeah, SPY, Qs,
Yes.
etc.
So web has like five other jobs.
Basically.
It reminds me of like an old, I think it was in Living Color or something like that, where I don't know. Webb just keeps on getting more and more jobs, and every time I talk to him, he's like, "Oh, you only have one job, you slacker. You need to get more or whatever." Sorry, I'm making bad jokes. Yeah. So Webb is very busy, so it's great to get him on tonight. And sometimes it is like even if he hasn't been looking at all the charts, sometimes it really helps to kind of go through and look at them and say, as like a uh, open canvas or and kind of just say, hey, this is what this looks like to me. We can definitely start with a spy chart and, talk a lot about some macro first and then kind of talk about a couple stocks that we're watching.
Absolutely.
So
Absolutely.
what's your indication when we start this way, when we start inside the value area?
So the rule is no matter what time frame that you're on, no matter what instrument you're looking at, when you start a new period inside the value area, then you're gonna fade the extremes is the term. So if we hit the top of value, short it. If we hit the bottom of value, buy it. And what had happened yesterday, or rather today, sorry, today is October 1st. What happened today?
Hmm.
We started inside of value, we hit the top of value to the tick on that chart, and we've sold,
Hmm.
which is basically the story of many beginnings of the months, recent months.
Yeah. I have a question for you. So the value area for obviously for the new October value area is based on all the activity from the previous month, from the previous period. We're on a daily
Right.
chart, so previous period is September. How is the top of the value area higher than basically, and again, it's basically, roughly one standard deviation is of the activity, correct? Can you just elaborate on why the top of value
So
is higher than?
yeah, so it gets a bit nerdy, so forgive me for a second, but I think that it's worth pointing out because it happened last month as well, right?
Hmm.
Um, that basically the way we construct the value area is towards the goal of the normal distribution such that one standard deviation of the volume is captured underneath the column. And so the value area is one standard deviation from the highest point of control, so from the peak. But the way that we actually calculate it, based on the rules that were set up by the floor traders in the 80s trading the S&P, is that you start at the price where the most volume traded, and then you start working your way outward from that price point. And you just keep adding to the total until you've reached 70% of the total amount of volume traded over the period. So what that does is you go up and down, up and down, up and down, expanding that value area until you reach 70%. Well, once you reach the top of the range from the last period, you can't go any higher, which means that you can only go lower. So if the point of control, like this month and last month, established itself high up in the value area, then it's easy for us to kind of hit the top of the range. And now we can't go any higher, but that sets your top of value at the top of the profile there. And then you're going to be moving the bottom of the profile lower, the bottom of the value area lower down the profile. And that's why we get that weird phenomenon. Even though you raised a really good question, if it's just the normal distribution, then we should never actually be at the top of the range. But it's not quite that simple.
I put myself on mute. Okay, perfect. All right. So it's not that simple, and that's why it's good to know that the overall, like what the overall um criteria is behind the scenes a little bit. So, and
Exactly.
that's what makes the valuers a bit different too. As Webb has put this together for a number of years, and like he's got the understanding of what goes on in terms of the calculations and so forth is just very good for us to kind of pick up on and go from there. Because if you look at the Qs, which they're different. And it's interesting the test today into that top of the value area. But again, you look at the volume profile, um, which this is the volume profile for last month, right? This is
Yeah.
or no, it's this, right?
This is the volume profile for September is what you're hovering over now. Yeah.
Okay, gotcha. All right. So, you notice that the point of control is down here. Um, and there's a lot of volume that happened in here too. A little
Yeah.
bit less volume up here
Right.
as we were going higher. So therefore it's more concentrated in here. So am I saying
Exactly.
that right?
That's exactly it. So again, we start at the point of control that starts the whole thing, and then we go out from there. And it's basically for every price level lower that has more volume than higher, then we add that, and you can look it up. Investopedia has a good calculation. I don't want to bore everybody here, but I will
I,
say, Christian, that now that I've given the secret sauce away, you can hit the record button.
what did I hit the record button?
Nope, we're not recording.
We are recording.
Oh, we are? On Zoom, we're
Yes.
not. Oh, you have a different thing that's recording. Okay. Well,
Yes.
good, good,
Yes.
good.
No, it's being recorded via Zoom. So does it
Okay.
not say it's being recorded?
It doesn't say that it's
But
recording.
but I could stop it if you don't want to give away that. Just let me
Oh,
know.
now I do see it recording why does it give me a record button if it says, okay, never mind. I'm sorry. Carry on. We're good. So I've given away the secret sauce and good luck, everybody.
Oh, geez. All right. Well, I don't know where to go. We can edit that. We'll edit that.
No, it's fine. Like I said, this is something, if you're interested in learning more, you can
Mhm.
Google how to calculate a value area using auction market theory or market profiles. And there's a few websites that have the calculation written out. Investopedia is one of them. There's a few others out there, and I can certainly share a link with everybody. That's not a secret sauce. I was just kidding.
Okay. All right. Like danger, danger, abort, abort. All right. So in any event, you know, I think just to take a step, I just wanted to show the difference between the value areas and how they look between the S&P and the Qs. But so you're looking at this and you're like, okay, as what I've been trying to do in the room for you guys, is just basically show you where there's some support. And one of the new bells and whistles or from a couple months back that Webb put together is just being able to see multiple value areas on the same screen. And this is a screen that I use quite a bit, which is the 1 hour chart, and I can see that value area for the month. And it kind of just gives you like a revealing look because of course when you're looking at the daily chart, or excuse me, the value area from the daily chart on a 1 hour time frame, on a smaller time frame, you could see that we almost broke out of it, and there was a bit of a rejection there. And I think that was this morning at 7 o'clock. So again, like these things all come into play, and then you could basically see how we're just kind of hanging around the bottom of value, and we did not break through here. We kind of hung around for like a good couple of hours. It was really interesting today because all of a sudden, like the market would move very quickly and then just stop and kind of hang out a bit. And I think also, even further when you look at the 5 minute, and here's what I'm referring to. Just, hurry up to kind of go nowhere for a bit. And, hanging around that VPOC at the 5 minute, didn't want to get back into value here. And did it again, but, did a bit of a U-turn, like fake out U-turn. And I was amazed. I didn't think that we were going to get back into the value area. And I actually held a short, which probably triggered that for the market to go up hey, he's got a short position on.
How'd it go, guys?
Let's shake him out. And
Yep.
and then we're kind of like right back to where we were. So, I don't think that the market really has a lot of conviction right now. Is like I just don't think that you're going to get a good enough reason to kind of buy,
Yeah.
other than the fact that I don't think I'm the only one thinking this, but it seems to me, and like what the popular view is too, is that, oh, we're going to dip a little bit and then we're going to rally at the end of the year. So that's what's the iciest popular is like everybody at this point is saying, hey, we're probably due for some type of a push movement down. But so that's by anything that you before we I just kind of go through a couple of these time
Well,
frames. Yeah.
yeah, like we'll get to some other stuff to point out, but I think what you're talking about is right. I think there's another thing on a day like today where everything kind of sold up. There's probably some traders out there who've recognized now a pattern of August and September and now October, and so they're expecting, okay, we're going to sell off for the rest of the week, and then we're going to rally for the rest of the month. So
Hmm.
like it's we have this recency bias and but I agree with you as far as like I don't think there's a conviction one way or another in the market anywhere to be found that can break the technicals. And what we're going to see, we're going to look at some charts that where we're just hitting top of value to the 10th and then selling off, or getting to a VPOC and selling off, or really obeying these technical levels. And when you see that obeying kind of market wide across all these instruments, across all these time frames, to me that indicates that there's kind of a bit of no unsureness in the market, right? Like there's no narrative driving the story. It's more like we're just trading things until they go the other way, which is great if you're scalping around, but like it adds volatility.
All right. Sorry, I had to make a quick change here. Let me just
Okay.
pit stop. Um,
Oh, okay. I was like, do you want me to share my screen? Is that what this is about?
hold on one second. I can just get this right.
My screen's
Get
a mess. No one wants to see that.
the share screen and
Like one example, I'll tell everybody while we're waiting for a screen to come back is if you look at crude oil futures today on the back of the Iranian news, right?
hmm
And if you look at like, I think the 1 hour chart, maybe CL1 exclamation mark. No, the 5 minute chart, like top of value on the weekly was exactly the top, even on
Oh
news.
yeah, look at that.
Like even on big news, don't get me wrong. Like the market was just like, okay, I guess we're going up now until we reach technical level. And there wasn't enough of a narrative, a story, of a fundamental change to break outside the technicals, right?
Hmm.
Technicals are great when the market doesn't really know what else to do. I remember, I'll never forget, honestly, like Christian and I were watching the market the night of the Brexit vote. And
Yeah, yeah.
right? And the pound was just selling off to VPOCs and then bouncing and then taking the next VPOC and then bouncing. And it was like when the market doesn't really have anything else to go on as far as saying this by God is the price or this by God is the trend, then the technicals really come into play and it obeys it very, very well. So in a market like we have right now, where we don't have an overarching story of like, well, we're not quite sure what the Fed is going to do. We thought all year that they were just going to be cutting. And I think that story is a bit more question mark now. Election, question mark. what's going on in the Middle East, question mark, et cetera, the market doesn't really have something to go on, then the technicals are going to be the thing to play. It's going to obey them very,
Right. Yeah, I mean, another thing that I think is the positioning and the sentiment behind things. I mean, I even get it was the same thing with the Chinese internet group, for example. I think people just got so tired of that group, and I had the KWeb ETF in the TTG trend portfolio for a little bit, and you just kind of get exhausted of stops and starts and stops and starts, and so I'm trying to remain somewhat I don't want to say optimistic about the energy market, but open to it doing something. And, I went long a couple energy names today. Obviously they were acting very well today, but, you just don't know. And, last week we saw nat gas rally pretty decently. Let's see, nat gas futures. Is this the right thing? Yeah, nat gas futures. And, again, it's coming from such a low level that, it's the question of where's it gonna stop, I guess.
Mhm.
But, there we go. Um, that's a tough chart too. That's for now, a counter trend rally.
Yeah. If we break
Um,
above that 200 day, that might change things, but that could be big resistance when we get there.
yeah, yeah, true. Absolutely. Um, Also, what was interesting was bonds. Like you and I have talked about bonds a couple times here and there. Here's TLT today. Am I on the right? I am on
Yeah.
the right time frame. So this one finished. TLT finished up as 0.75%, but at one point, I mean, this was raging, and I did take I took my first target in TLT today. But again, that's not like a very compelling candle. I mean, I like the way
Right.
that this started the month. Um, but does this say like jump into bonds here after that kind of candle? I
Right.
don't know. I
Right.
do like the fact I think this held the top of value. Oh, maybe not. Maybe the 30-year bonds, but VPOC takeout and a bit of a reversal. We'll see if it can break out of 98.71.
But I'm with you on it, and well, I'm not in a position at the moment, but I'm really like looking to put a limit order, buy limit order at the bottom of value for the month.
Hmm.
Just as I was saying minutes ago, right? When you start inside of the value area for the period, then fade the extremes. So if we continue to pull back, like even just tomorrow, we'll probably tag the bottom of value for the month, and then we'll bounce from there. We should anyway, according to the rules.
Yeah, and again, so looking at this 1 hour chart, you could see both the value area for the week, which does indicate high volatility expected, which is nice to see that little note in there. But you've got that support and you've got the value area for the month support. So we were there, this morning, I think, or no, that maybe that was well, forget yesterday was not part of October, but so we
Right.
started that way yesterday and nice little test of support and bounce. We just kind of got stifled, I think, by that VPOC up there. So we'll see if that, we're going to need more buyers to obviously come in because that was a great point of, hey, take a target. And I think I did take a target, I think at like 99.20 or something like that today.
Nice.
So that worked well. So to take a target there. But yeah, you're finding in each one of these, and I always go through when we've got and I'll just call it like macro tape, which we had today, where there's something going on geopolitically, there's some type of escalation going on. The things that I tend to look at, I go right to it's always the same playbook. It's always a different reason, but it's always the same, or it's usually a different reason. But it's always the same playbook. I'm looking at the VIX. I'm looking at what bonds are doing. I'm looking at what the dollar is doing, right? And I don't think the dollar was up decently today. Let's take a look. Yeah, dollar was a bit stronger. It made it. Oh, look at that! Right to that VPOC.
Yep.
That's the UUP, and it looks like it's pretty tight for the month and the week. are both almost like very similar. So if we stretch this out, you're going to see that we are now above value for the month. And the bigger box is the value area for the year. So still in value for the year, but it's just very interesting. This was last week, right? Last week was the Fed meeting, was it? Or no, was it 2 weeks ago? It was a week and a
Weeks
half
ago.
ago.
Yeah, 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 yeah.
The dollar was very interesting on that day. We started to look like, at one point we tested the bottom of value there, no breakthrough, and found buyers and bounced. And I really thought that this might start to head up, and it didn't. It hasn't really done much. It's been whippy, but today got it to really move. Now, I wouldn't say, other than this month's top of value, but I think that 1 hour VPOC is something to note, and we'll see what happens there. But I think that'll be a proxy too. And just as what you said a couple minutes ago, that the market's looking for more information, right? So
Yes,
it goes up to that VPOC.
right. Because it goes back, it runs home to mama, right? Like it goes back to prices that it knows that it's comfortable with to test them. Like, where do we find more buyers here? Are we exhausted here? Is this a comfortable price? All of these things. There's a story being told. One thing I'll highlight too, because I get this question a lot. Can you go back to the daily chart is fine, where it showed the yearly value area.
Hmm.
Um, we are in value right now. The 80% rule has already played out for this year. That's why it's not flagging.
Gotcha.
So yeah, uh, yeah, it's because we started below value for like a day,
Yep.
and then we traded all the way up to above value. We've traded above value, and now we've broken back into value. But there's no 80% rule because the 80% rule can only play out once during the period.
Hmm.
So all that to say, we're going to have some high volatility that's expected. So I expect some high volatility this month in the dollar, but I don't think that we have a specific direction or guidance in direction because the 80% rule isn't there to give us some headwind or tailwind.
Right. Next, anything you want to cover? I've got a couple other
Uh,
suggestions.
why don't you go through it? I'll try to find some stocks to talk about as well.
All right. Want me to go through just a couple and by the way, whatever charts that you guys want to go, or whatever concept, again, having web on the webinar is just great if you've got, questions on the methodology or just the overall understanding of the market webs, because he's the guy to ask. Um, Plus, anything else that you want to ask him about, calculations or different things. But like, this is a good example. Once the 80% rule plays out, do high and low levels still matter?
Right. And that's a good question. And they still matter in that they are value area high and low. And we know that the value, like if you've been trading with the market webs long enough, or been trading with auction market theory and value areas, then when the price is trading outside of value, either above value or below value, then the value area acts as support if we're above or resistance if we're below, right? So the value area itself still is significant in that kind of support and resistance. And of course, when we break into value like we have here, even though the 80% rule is not in play, the 80% rule being that if we break into value, there's an 80% chance we go to the other side of the value area. That's not in play here because we've already done that once this period. But we still are now we're inside of value, which means once we're inside of value, the top of value acts as resistance, the bottom of value acts as support. It's like a pivot level. If we're trading above the top of value, then it acts as support. If we're trading below the top of value, it acts as resistance. So those levels are still significant from that aspect. We just don't have that one special rule kind of helping us if you wanted to be a dollar short here, if you wanted to bet on lower interest rates or something like that. Like if if the narrative was that the Fed's going to cut another 100 basis points between now and December, then the dollar should be selling off. Well, the dollar is not really supporting that. The 80% rule is not here to support that. Who knows what's going to happen?
Yeah, exactly. And I've tried to point out, where I see the opportunities where, something like this, I think also when you go back to the Qs chart, there's a couple different ways, but, the 80% rule is a nice thing to have, right? Is a nice thing to understand. But there's so much more that's, going on here. And for example, is this toolbar still in here? When you have something like, let's just try something else here. Oh, I can't get rid of that. Um, do you guys see that toolbar there or no?
Nope.
Oh, okay, then I don't have to worry about it. But something like this where you start above value and you break down to the top of value. Like, okay, one possible thing could be that this triggers and if it breaks into value and triggers that bearish 80% rule. But if it doesn't, you know, I'm not always looking to play that rule. Like you got to adapt and say, okay, if it holds here and we begin to bounce, hey, that's a great level to trade off of. So, and there's nothing wrong with that. And that could also take a little bit of time because of where we are from a seasonal basis. But uh, you know, so I get so many questions. It's like one of the top questions. For whatever reason, the 80% rule has become very popular web, and I get a lot of questions on it. Like, and I will always get the question too, as soon as like price will barely close into a value area, folks are like, 80% rule. And I'm like, ah, give it a little bit.
Yeah. Yep.
That's not really how it's meant to be used. Is that as soon as something happens, we want it to firmly establish. So, let's say that we open up tomorrow, like in the red a little bit, right? And it's 9:30 in the morning, right? Or the first hour of the day, and we've opened up inside the value area. I will usually get a question, bearish 80% rule. And I'm like, guys, it's the first hour of the day.
Yeah.
Be a little bit patient with, we got to see a bar close. And you want it to be like not a barely smidge into the value area. You want to see it really kind of close as it's going in that direction. You don't want like, and you can see the tail of this candle. That's not what you want to see, like to trigger the bearish 80% rule because buyers kind of came in, right? You want to see like a big red bar closing, maybe a 16th in or an eighth in, and then I would say, okay, I'm gonna go after that. But I'm not gonna do that if we like 10 cents close inside value. Be patient and have a use this as a good understanding, not as an exception. Um, so anyway, that's the way that I would look at it because uh, it's not an exact science. As much as the valuers give you exact levels, and sometimes they're just really good where we go up to a level and get rejected. But there's other times where there's going to be these things where you're going to get like an oops, where it's going to break in, and then all of a sudden we jet right back up. So, and I'm not saying that that's going to happen. I'm just saying you've got to be prepared to be, versatile in terms of that. Do you agree?
No, I completely agree. And in fact, Dalton and the other auction market theory guys always talked in these terms of like, is price accepting or rejecting being inside or even outside of the value area? So we're going to come in and test it, but there's a chance that it gets rejected, right? Like as you were saying in that example, the buyers came in and said, no, 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 we're not going to do this. We're buying here, right? Because the buyers will, if we're outside of value, we're in an auction market, i.e., no one quite knows the price, and everyone's bidding and selling in order to discover what the price should be, right? So if we're in the auction, then the top of value, which was the previous non-auction area, sets a really good floor for the auction. If we break below that floor, well, okay, there's an auction happening, but like who knows how low it's going to go, right? That's the kind of mentality that triggers the 80% rule. So otherwise, though, if we're not going to do it, we reject it, then buyers know this is a good price. The top of value is a good price in this auction to buy because it's probably going to go up from here if we're establishing some new price above the previous price. And so you got to wait for these confirmations, as you were just saying. You and I and plenty of other traders who use auction market theory have gotten caught out by moving too early and not waiting for that confirmation. And sometimes you even have your confirmation rules in place, and it still rejects. You know,
Yeah,
that's
yeah,
trading. That's the market.
yeah. Yeah, and you have to realize too that the market likes to continuously fool a lot of people. So that's why you don't want to if you start to think one, and this happens to me all the time. I start to think one thing like, okay, I mean, I always will have a watch list that I start the week with. And but I'm fully willing to like, we don't know how that week is going to go. And there could be a whole bunch of new information like we're getting right now, which is going to make you change your trading plan, is going to make you change your watch list. So I try to really do that and really kind of stay objective in terms of what kind of opportunities we're going to see. Now, it's always good to have a plan, but you've got to change your plan based on that. And the market webs do a great job at that too, because you may be looking for a long, and then all of a sudden, um, or like today, I was thinking that I really thought the market was going to break down more because of how we started the month. And just that there's too many things. I think that there's just too many things going on. I don't know if it's just if there's one thing in particular, but I think that there's enough things going on where people are going to get a little bit more risk averse, right? And not want to just buy the dip right away. I mean, we haven't since the first week of September, we haven't really any multiple day dips, but I think a lot, and again, maybe we won't get one because a lot of folks like myself are thinking that that's what we're supposed to get at this point. But okay, market, you got to keep adapting, to what we're going to get. And, I would rather have some longs on and have a hedge on at this point, but we'll see. Any area that you wanted to go to? I brought up the IWM for a minute, but this IWM is just too tricky for
Okay.
me, and it's been this way now. It's like I refer to some of these charts as chutes and ladders. Um, just ladders going up, and then they completely just every time it seems to want to do something, it just retraces either all the move or a good portion of the move. So. This is more of like I think has become more of like a day trading vehicle than swing trading. It just is really messy.
I was thinking about it ahead of doing this webinar with you. It seems like around this time every year that we do these webinars, I'm thinking back to our January opening of the year webinar and like
Hmm.
whatever I must have said as a prediction, and then kicking myself for not listening to myself. And I remember saying that I was really interested in staples and utilities.
Really?
I did.
Yeah.
And I remember everyone in the chat being like, "Has Webb lost it?" Like, what is wrong? And look,
Yeah.
XLU has just been like, just straight up, like, what? Why didn't I do this?
Yeah. Well, well, what was the reason that you thought that these were going to be because because we broke back in here?
Because I was detecting, on a fundamental macro basis, right? That I was detecting some of the economics in our world were starting to deteriorate to such an extent that we were going to have to cut at some point because maybe the Fed gets on the back foot, maybe we have a recession coming or something like that, right? And so what I was seeing was towards the end of last year, a rotation out of these like discretionaries and the high flying techs and stuff like that, and a move towards these kind of safer assets. That's what I was
Hmm.
feeling at the time based on rotation graphs and stuff like that. Right? Obviously, we've had Nvidia and all this other things like still going off to the moon, but these have been silently just doing their thing based on what they should do given the macroeconomic outlook. Um, and again, I didn't take it, but that was the thing that came to mind when I was thinking back to our January.
Gotcha. Yeah, I mean, but like even in here, so the bullish 80% rule completed. VPOC takeout, went a little bit higher, like, so standard digestion, and
Yep.
you know, notice that like this bar was pretty darn good, because now you've taken this out, that's gone, and a move higher. If you could just reset the clock back to July, I appreciate that, Web. And
Yeah.
look at the rip since July, going higher. And I remember th this was a chart that we looked at too. Um, what is it? Is that what's not VRT, but what's the other VST? Is that the yeah. So I mean, I thought that this was extreme enough. This was one, two, three, four Venoms.
Yeah.
And I really thought that that was it for
Yeah. Someone asked me recently, like, how many Venoms are there? Question number one.
mhm.
Question number two, like, how often do we get? Because I was like, there's six Venoms on either side. They were like, how often do we get that far? And I'm like, well, not very often, but every now and then you get a flyer. And
Yeah,
here we are. That's going towards the fifth because we're only above R4 at the moment. R6 is really rare, but I think Nvidia hit R6 last year.
right. Okay. So it's a good question regarding when you enter and go back above.
Yeah,
Do you want to explain that?
yeah, yeah. Let me talk about this chart for a
That,
second.
that's a great
So
question.
the question is interesting to see XLU start inside of value, fall out, then come back and hardly look back, right? And any rules or bias formed around when the stock starts in, leaves, and come back, or vice versa, starting out, going in. Okay. So the first thing I said in this webinar, when you start a period inside of value, you fade the extreme. So you would buy the bottom of value in this case. We rejected it. We didn't stay there very long. This is a weekly chart, so that's 3 weeks in, and we broke below it. So now we're trading below. So again, now we're in a price auction of how low we're going to go. We turned around at S1, Venom S1, so that was the lowest that we got, and then we got back into value. That's the question here. Well, the 80% rule is in play now. So because we traded below value and did some auctioning down there, and now we're accepting price back into value, that's the condition that is required for the 80% rule to be in play. So that whole thing about starting price inside value is now long gone history. Now we're 80% rule. That's the prevailing rule that we're trading with, which happened and completed mid-May or early May. Then we broke above value, we take out the VPOC, and now we're auctioning above value. Okay, great. So now we're establishing price above value, and we came back down and tested the top of value. And even we tested the value area itself for a couple of weeks, rejected it, and boom, now we're off to the races. So twice with all these tests and rejects, obviously the price action just shows it, obviously, but to say it, right? We have tried being bearish, and this market doesn't want to be bearish. It wants to be bullish. So all those checkbacks. And you can kind of play the checkback. When I first see something break out of value from trading inside, maybe the 80% rule is just completed or it's breaking out of value for the first time, I will, if I missed the move, I wasn't already in it, but I'm interested in it, I will place my buy order at the top of value with the expectation that we're going to come back and check it before creating that new trend. Um, it happens often enough. I don't have a percentage of how many times. Someday I will test that for you. But it happens often enough, and it would have worked here, but it would have probably gotten me trapped out because of those 3 weeks where we tested inside the top of value but broke into value. Also, the same goes for when we broke early in the year, when we broke below value. Again, if I wanted to be short the utilities, I didn't. And we can go back to the recording to prove I didn't. But if I wanted to, I would put a sell order at the bottom of value and short it there, right? Because once we're outside of value below it, now the bottom of value is resistance. Here we checked it, but we decided, no, no, we want more, and off we are. So that one wouldn't have worked. So I would have gotten chopped up probably on both checks if I was playing it that way. But that's pretty much how that action all played out and how I read it.
Yeah, I mean, the main thing that, one of the things that I always come back to, and it's one of those catchphrases that Web and I use quite a bit, but it's really a roadmap for making decisions. And once price reestablishes itself outside of value, meaning like we're back in price discovery, you want to embrace that and you want to try a trade when that happens. Um, and then you get a stop sign. Like if we start to break, like if you're long here and you're looking for further upside and we break in, right? That's your stop sign to say like, okay, something different is happening here. But you re-engage once you break back above. Another thing to look at too, which I'm just observing too, is even on those pullback weeks, because we're on a weekly chart here, right? Look at how low the volume was on those pullbacks.
Good point.
So, it was a low volume pullback in a sense, and the volume kind of came back. And I mean, I sometimes I use volume like that, sometimes I don't. But I think when you're looking at a pullback, you kind of want it to be on lower volume. So,
Yeah.
and again,
Yeah.
just like we were saying before, it didn't stop perfectly at the top of value. So again, you have to adapt from it being, it's not going to be perfect, right? Nothing is perfect, but it's giving you that level to kind of, because again, the market's not going to be perfect for everybody like this. And even as great as I think the MarketWeb's value areas are, it's not gonna be perfect for us. The market's just it's too complicated to give us exact perfect levels. But so what do you do on this point? Like if this shakes you out and you're out of a trade, you set your alert back to this top of value level, which I think it's like 69.56, and you kind of like set it and forget it. And if it gets back above there, then you want to get involved. Like, and I did that today with NEE. I was looking, I established a position last week, and sorry, let me just move this. Can I move this? There we go. Get this out of the way. But I did this with NEE last week. Um, where I was looking at this and obviously all the utility companies and look at this thing, tags the top of value, retreats, um, gets there again, doesn't really make it out, and then move higher. Now we did take out a VPOC, so some digestion is warranted there. Um, but and here's the VPOC here too, but we're trying to get back above. And now that so we're trying here. Now again, there's no guarantee that this is going to continue higher, but we did close above the value area for the month. And I actually added a trade into that strength today and was able to take a target at the end of the day. But it's just worth a shot. I think as strong as this group has been, I'm certainly not going to call the top in this power trade that's going on. Yeah, and so they create themselves, over and over in terms of, as we get as we just have a new month, there's going to be new setups for that. So yeah, a lot of times, what I'll do, especially when there's that setup in July on, yeah, um, so yeah, notice again we hit the top of value there perfectly, and was not ready to retake it. But yeah, I mean, as you get to a new month, you're going to have those new support and resistance levels. Now, of course, I like to set alerts on for breakout trades. I don't like to do it when it's too far of a break high, where the value area is too far above. Like another name that I'm looking at too, which worked for me last month, which is sorry, that's the wrong. Whoa, look at that BPOC takeout. So that's another, just by accident. Sometimes you see these things, but I'm watching DVA, and we'll see if this one wants to break higher. Now it will have to get through that resistance, but provided that there's enough buyers, you may see another leg there. It also may not, it may need more time to digest because it's had some good gains in here. Again, it kind of helps to look at that, but this is just some inside candles here. So it's just kind of digesting here. And again, I think the market likes these types of stocks right now, where they're a little bit more, they're boring. versus the AI trade. And you know, we were looking at Micron for what happened with Micron on earnings. I don't know if I think Micron did take out a VPOC in here. You know, it's very interesting with how this went up this much, and then there's no you know, I think it caught people off guard,
Yeah.
but there's no follow through yet in this
Yeah.
thing. Any opinion on this one, Webb?
Uh, I mean, it's, you know, when the market won't sustain a rally on that, right? You gotta say that the bubble's bursting, if not burst already. You know, we're not in the disgust phase because there is some upward momentum, but you don't see people joining the bandwagon of AI and tech and all this other stuff. Uh, I think that could change if we get back into a lower interest rate environment, perhaps. But you know, I don't know what else to say about it. I'm not seeing it. Like, I think you were asking me like what stocks I want to look at. I'm like, I can't find anything because all my portfolio is all just taking a beating. Yeah,
Come on now. All right.
yeah. For a bit,
S-
like even last week, I thought I'm on to something. Let's go. And then yeah, things are just selling off. Like I thought, you know, I thought crypto had a chance over the even over the weekend.
mhm.
Things like Robinhood, but now just so quickly this market will take it away. It's crazy.
Yeah, well, we might as well talk about this one because it's an important stock. I think it's an important stock for the market, and
Yeah.
I I'm under the assumption that you're going to see these starts and stops, but I said it you know, a couple of weeks back too. I think before Nvidia reported that I just think that there's too much hot money in some of this stuff, and people need to kind of forget about this group for a little bit, and then it will probably go back up.
Yeah.
But you could see the rejection today. And I was actually looking for like a day trade today. I didn't get it. You know, here's what I was looking at the end of the day, but we could not break back. This is the value area for the week. When you look at, I'm on the 1 hour, I'm on the 5 minute chart, and this bigger
Yes.
box is the 1 hour chart, but you know, we couldn't do it again. So it's just not ready. And so again, I try to trade like right in where, what time was this? I think I tried to trade right in here
Hmm.
and thinking that it had a chance to maybe if we saw like a you know end last hour of the day type of rally because I only had an hour for the trade to work. But as soon as I started to see it not make it, I was like, all right, I'm out. And I was in at like 70 cents and out at like 50 or 73 cents or something like that. But hey, I'll take that shot all day long because if it breaks in, it's got a little bit of it's got some runway
Yeah.
you know, to here. So I think that was good risk to reward. Um, you know, it just didn't do it. And the valuers kind of gave you a level because notice what it's doing now. You know, this was at 117.70. Stock's trading down about a buck. And, you know, maybe the next level of interest would be down here
Yeah.
for tomorrow, because this yellow box is the value area for tomorrow's day. But it will still respect that in the after hours. But yeah, so that would be the level to watch. And again, they provide a little bit different pictures when you look at the daily versus the, you know, there's a rejection. It didn't make it. Um, so, you know, and again, like not that I want to short Nvidia, but maybe others do. Um, but here's your break, your 80% rule did play out, right? This is the value area for my are these overlapping?
Uh,
No, it's not this is the value area for the week. This is the
yeah.
value area for the month. But notice, so again, you forget about the 80% rule, doesn't matter, right? Here's your break through the bottom of value, here's your retest and a fail. So retest and a fail is a good opportunity for a short. Will it break this? And I would really kind of wait until it breaks back below that VPOC, but you know, could have more downside.
And if we do to talk positively, like get into that weekly value area, the one that you tried to trade for and it didn't work
Hmm.
out, there is the 80% rule potential there that has a 7% gain over the course of the week, which is a it's a pretty good trade if we can break into value and move back up. Um, the big box that we're looking at right now, right, is the monthly value area, which is the webs will calculate the 80% rule using the daily candle, even though on this chart you're looking at a 1 hour candle. The calculation is based on a daily candle. So according to that calculation, we opened above value, but we closed inside of value.
Hmm.
So that's not alone enough to trigger the value area, the 80% rule. But if tomorrow we stay inside of value for the month, that will trigger it.
Okay, gotcha. So yeah, so see how this like if you're pretty neutral here, in terms of your opinion, you could play this any way you want, depending on what the price action dictates. The
Yeah.
short to me, so Webb is saying, sorry to repeat you, but um,
Okay.
Webb is saying that if this stays inside the value area for the month, which is
Yeah.
uh,
That's the big box, the gray
which is
box.
here, right?
Yeah.
So as long as price stays below this 120.90 or call it 121, right? As
Yeah.
long as price stays below 190, 121, it's going to trigger the bearish 80% rule, looking for a move all the way down here. Right. So that's the key, is that it's got to stay below here. I would also add the caveat, I would want it to stay below the value area for the week, which is the yellow box. So it's a little bit complicated, but that would be the bearish 80% rule. Now, let's say that it doesn't, and let's say that it actually breaks into the yellow box, right? Well, that's going to actually set up the bullish 80% rule on the long, so for the long side. So you could either have the bearish 80% rule possibility here, or you could have, and that would, be a move all the way down. That's like 8%. And again, this is for the month. Um, or for the week, if it manages to rally back inside here, now you will have to watch your resistance for that's kind of going to conflict a little bit. You're going to have to watch that resistance of 121, but you could play it long to here. And then if it gets rejected, it could still set up the bearish 80% rule, right? So break in, maybe up here to retest, and then back down. Like that's a possible scenario. There's lots of scenarios, right?
Yeah. And I was just trying to get my thinkorswim to open up because I want to see what the strangle is pricing, right? Or the straddle.
Hmm.
Because if it's pricing, something less than 7% in either direction, there there could be a non-directional trade to go with.
Right.
Because if we break lower, like you were just saying, there's 7% to the downside. If we break higher, like we were just saying, there's 7% to the upside before the end of the week.
Well, yeah. Whether or not we pause at that top of value for them,
We could also flounder and do nothing. Yeah,
but that's
100%.
still 3%. I mean, that's 3.7% to
Yeah.
the upside, right? And that would be like, I would take off half my trade there,
Yes.
and then
100%.
watch to see if it can get that other 3.5%, basically. But yeah, and again, like these are the way, like just knowing where that resistance can occur again, can, right? I mean, it really is going to be, it always depends on how many buyers and sellers are coming in and, forcing price action. So,
I'm looking at a chart right now that really talks about the power of the 80% rule. Bring up the daily chart for Tesla.
whoops, sorry. Yeah, this has definitely been an interesting one. Not for me, it hasn't been super straightforward, but it's the
Oh,
80% rule still kicking.
still kicking. Like, so we triggered the 80% rule. Well, we first tried to trigger it in late April. Then we properly triggered it late June. We got really far, but we didn't complete it. We did not complete it. And I think that's what I want to highlight here, right? Is that we didn't get the top of value touch in July. And we sold off. We came back down. We touched a VPOC below value to the tick. And now we're back the races. And that 80% rule is still in play. We don't have much further to go, another 6.5% to go to get to the top of value for the year. Um, I definitely can't fight it, but I'm I'm a I'm the type of person that would love to fade some of this because I just don't think the fundamentals support it. That's my opinion. Everyone's perfectly entitled to their opinion. I don't fault anybody for however you think about it. But like I'm looking for an opportunity to short at the top of value. But until we get there, not touching it.
So no robo taxi for you.
Yeah, yeah, I'm not a believer. Um, but I'm also, I could be long here, but I'm not that active, and I don't have to, fight every bull in the market. There's well, these days I'm monitoring like 18,000 stocks. I don't need to trade every single one of them. That's for sure.
Yeah, and especially like those where you're, if you're biased for one way or another, it's almost better to, I
Stay
don't know, the
away.
ones that you're really biased,
Yeah,
it can kind of mess with you. But this was tough because I don't really like charts that go up and then down, and then I like to have more of a consistent trend. And I've adopted a trend trading philosophy. But when something isn't a nice, neat trend, I don't like it. But that said, like, because this move up, right, was a very fast move up. But then it like I don't like when something gives it all back like that. But it gave it all back, and it did take out that downside VPOC, and then got back into where it needed to be. So I mean, again, like to try along, like all you had to do was basically set your stop, maybe to this VPOC down here, and since then it's been not bad of a move. I mean, look at this fake out here that happened, but I don't remember. Oh, was that on? That wasn't even on earnings. I don't know what that was. Maybe it was on deliveries or something.
yeah.
Um,
There's so many idiosyncratic news stories for Tesla like deliveries and things like that. So it's hard to track that stuff.
what's XAU gold? XAU. That's an index, isn't it?
Utilities apparently do for me.
It's no, it should be gold, but
Yeah.
I think that's the index. So we always want something that's going to have volume to it, right? Is XAU an index?
Uh, Gold and silver sector index, according to TBC. Gold and silver ETF.
Okay. Trades on Toronto, the Toronto exchange.
Maybe. I'm not used to this one. I don't know this one. XAU. There. NASDAQ. XAU, gold and silver sector index. It trades on NASDAQ. Okay.
All right, but I got the wrong thing up then. Let's see.
Yep. Try again.
No,
Not gold.
it's an index. It's not an
I don't know.
ETF.
Yeah, I don't see, there's no volume. Yeah, there's no volume in it.
Yeah. So you got it like so when we're looking at stuff, it's kind of the same thing like with the SPX. Like you'll never see me chart the SPX because there is no volume in the SPX. It's just an index. Now, some people like to look at the volume of all the underlying names, but um that's not actually tradable volume. So, this is
Yeah.
the gold and silver. So right, like even in your trading, so let me ask this question back to you. Whoops, what did I do?
What's happening, Christian, is because you've got stocks selected, it's not coming up. If you change it to all, then
Okay.
it'll appear. Yeah, and then the second one is from Nasdaq. But again, to your point, it's an index
It's an index. Okay.
or a CFD if you want.
Right.
Yeah.
Okay. So bring up, so let me put the question back to Bhavesh. You're not trading XAU, right? You're just looking at it for, I guess, chart purposes. What are you trading? What's the product? Yeah, you're just looking. Okay. So, so again, that's fine. But we can't really chart it very well because there's no volume on for the market webs, right? So
Well,
we could, of course, what's up?
you can. The market webs, if there's no volume, it will default to using time.
Okay.
Um, but it will be a different value. So if SPX versus S&P mini futures, for example, you're gonna now with TradingView, you're gonna get market webs on SPX. And we didn't on Thinkorswim, but on TradingView we do. But the value areas are likely to be slightly different than what you would see on the S&P Mini or in the SPY. You want to chart where there is volume and where there's people making decisions to drive it. Now, time is one thing; it's price at time, uh, and time profiles and all that other fun stuff. So I am using that, but it's a proxy, really. To Christian's point, you want to be where the liquidity is and where all the action is, because that's where the most information is in the market.
Yeah, and what they'll do for depending on what charting system, so and like this is just a good just overall lesson is that the the like an index doesn't trade, right? And they have to make something that tracks the index. Um, like an ETF, and that will provide you, the ability to trade it. However, like if it's an index with stocks in it, what some platforms will do is try to aggregate the volume of everything that it tracks and kind of give you, and that's why you see volume on the bottom of the screen. And that's why sometimes people will look at SPX volume for the day or NASDAQ volume for the day, because some charting platforms will actually aggregate all the volume in the underlying index that it tracks and report that for you. So that's why sometimes people use that to track. They say, "Oh, we've got a very low volume day," because they're looking at all the underlyings. But anyway, give us like in gold and silver. Happy to kind of look at whatever you are trading in the group. We could start with something like gold because I think that's a good chart to review. Weekly, like obviously this thing is, this has been another beautiful trend. I'm glad we have it in the TTG trend portfolio. I don't have it as a huge weight. I did up the weight recently as we kind of took out that next leg. Once we began to make this next leg higher, I did up it, but take a look at this too. So, I mean, and this is another thing too, where I don't want to keep uh, going through this point about, we started the year above the value area, right? Notice this bar that went inside this. So would I be chomping at the bit to say, oh, bearish 80% rule on this hammer bar for the week? No, because that doesn't really, to me, tell me that sellers are really that involved, right? Buyers actually came in and supported this. So again, you have to take these things with a grain of salt. And again, the reason why I'm hammering this point home, even though on the hammer bar there, see what I did there? It's just because I get the question so much. Like as soon as the price gets into the value area, people want to like say, okay, bearish or bullish 80% rule. You got to use you got to put your thinking cap on, right? And say, first of all, you got to wait until it closes. But no, this is not something that I would want to. Once you see a hammer bar, that means buyers are coming in and supporting it, right? So you want to pass on those things. And kind of, not play the bearish 80% rule, but actually look for the opportunity to go flip it and say, hey, if it actually breaks back above, then the breakout trade is in effect. So the 80% rule is nice, but I always look to where money, right? And it's really on breakouts, right? That's where you're going to make the money. And again, sometimes I'm a bit uh I I'm trying to think. I'm not as delicate as I should with folks, but like the 80% rule, that's nice for a trade, but this is more. This is like a really nice move. This is what I try to say, like what we should be capturing in the room, or what you should try to be recapturing in investments and bigger trades, is to understand when something bigger is going on here. And look at this thing, and you can't time. No one can time when a trend is going to end. Folks try to do it. They try to, oh, this is a Fibonacci extension, and like, what's your opinion on you're a CMT. What's the opinion on, would you try to fade this at fib extensions?
I mean, I would no. I think, but I think that like I could see someone doing that, but only if you have other indicators telling you there's weakness or overbought situations going on. You're going to have to look at what the RSI is telling you. You're going to have to look at what volume is telling you. I think, like, I can't like, you really put your finger on something multiple times in this webinar, and I just want to like reiterate it so no one misses the point. You have to be looking at what volume is confirming or volume is denying on all of these moves. Like if you have a significant up move, but volume is going down, it's trying to tell you that there's not a whole lot of people believing in this move, right? That's the whole concept that some others believe in about the anchored VWAP or a VWAP at all, right? Is volume weighted average price, right? So as price starts spiking, but if volume goes down, the effect that that spike in price has on the volume weighted average price is less effective because the volume is going down, right? But that should go into your trading plan as you're reading a chart as far as like, is the volume confirming this move or rejecting this move? And I think it's a really important part. So whether you're looking at Fibonacci extensions or Elliott wave or whatever else, cycle analysis, anything, market webs, even just moving averages and breaks of moving averages, crosses of moving averages, you have to see what is volume telling you too. Is it agreeing with this move or is it denying this move? It's one of the most important indicators.
Yeah, and as long as like the bottom line is whatever tools you're using, right? There is no perfect indicator. You know, it should be helping you. Should helping you, in my opinion, should be helping you make decisions. Every once in a while, I'll get someone in who's like, you know, who they want to use that 80% rule because they want to try to predict. It's not really what it's about. It's really about having a rule to say, hey, this is significant, and I'm going to go long based on this significant level, and I'm going to make my decision. And really, that's where folks think that they're trying to find something or somebody on Twitter that is going to be able to predict for them, right? Or you know who's really good at it. But I've noticed that the people who do that, they talk on both sides of their mouth, right? There's one guy I know on again I won't go off too tangent here, Webb, but the reason why like people get very comfortable with that because the market will go up and then they'll say, see, you know, I wasn't surprised that this happened. Right. And then the market will go up for like 4 or 5 days, and that person will be, hey, you know what? I won't be surprised if we get a pullback in the next 2 weeks. Right. And then when that happens at some point, and that's a very general thing to say, it's hooking you into being these general statements. And then once that actually, if there is a pullback in the next couple of weeks, they retweet it and say, aha. Right. It's the same thing with the option activity, right?
Yep.
Some people will quote 100 different things in option activity, and then they'll retweet the ones that, aha, I mentioned this 2 weeks ago that we saw a call buyer in this. And again, I'm not saying call buying is not interesting and important. It is. It helps, right? It gives you signals and it gives you ideas. But this is just it's salesmanship. And so there is nothing out there that's going to really like predict these things for you. But it's like, you know, this was a good, for example, right? It's just giving you a sense of saying, it's all about risk to reward. And if this can skew it for you a little bit, it should help. Here's your level to go long, right? Digest, you know, look at how bottled up this was, right? And once this broke higher, now again, it gave you a little bit of a fake out candle, but here is your candle to go long, right? Now you have to be you still have to be a savvy trader here because, you know, if you didn't go long on this day and the day two that you were waiting for, right, now you're a little bit extended, right? So yes, you're still active in the breakout, but the next, if you went long here, you're going to have to wait like another week until you're profitable. That's not easy. That requires patience. That requires conviction because when this thing goes all the way down, your buy signal is still active as the breakout. But your mind is going to mess with you and say, geez, now I bought this second day and now I'm down $3 or $4 in this trade, right? And you know, so that could really mess with you. But so again, you know, if you're going to chase on that second day and it's a little bit extended, you do it with the ability of a partial position, and you say, hey, I'm going to add if it comes back in here. Right. And that's how you can kind of frame things. And, you know, it did very good for the month, for the whole month. And giving you a chance to say, hey, here's your breakout. And it never really came in and wiped you out in terms of that buy signal. Sorry for the rant, Web.
No, you're good. You're good. I got nothing to add to it. The one thing I would add to it, I guess, is um, that I think another thing that a lot of traders don't really think about is that more often than not, an indicator is not indicating it, right?
Mhm.
Like they're designed that way. That if the market is doing normal market things, then the indicator is not saying anything. Look at the RSI on your chart right now, right? It's not indicating anything. You can try to read some tea leaves in it and say, okay, well, the RSI is kind of moving up, but it's not above 70, which means it's not indicating an overbought condition, right? So it's important to look at across all the indicators that matter to you that you are like that you're comfortable reading, and maybe make rules for yourself to say, I'm not going to be in a trade unless I have three indicators indicating the same indication, and
Yep.
I'm going to take that side of the trade, right?
Yeah.
Um, because I think what one of the core ideas of what you were pointing out there about other about furus on FinTwit or whatever else is that you can't just pick a stock and make a prediction about it. If there's no indicators indicating anything, or there's only one indicator indicating anything, or only two or something like that, it's not enough to say I'm going to put my money down on this, right? Like, go find a different stock. I swear to you, at any given moment, there's a stock out there screaming for you to buy it on an indicator rule. It's about finding that. But wait, you don't have to trade every stock. You don't have to predict the price movement of every single stock. That doesn't make you a genius. The genius is making money, right? I think the guys that actually make money are waiting for the right constellation in the right moment, and they're kind of agnostic to what stock it is.
Right. Yeah. I mean, and I've had folks that will traffic in the room, and I've gotten one of the criticisms that I get is I do look at a wide variety of areas and names. And for some, they just want to concentrate like on maybe 5 to 10 names. And that's fine too. But there's a couple things with that. Number one is those 5 to 10 names, you've seen this happen from time to time where there's just institutions are not they're taking profits in those names, right? And they're not going to be accumulating those names right now because for whatever reason, the valuation or there's another theme at play, right? So that's the one thing, and that's why I try to provide um, a different look than that. We do look at the Magnificent Seven, or I call them Grade Eight names, to see if there's an opportunity there, even though I think for the most part they're great because they're liquid, but you know they're not in the same stage that they were a couple of years ago, where they were just going up and up and up. But number two is if you still traffic in the 5 to 10 names, and that's what you do, I think from time to time you're going to want a couple new ideas, and so I try to provide those new ideas to say, hey, this is something that the market is grasping onto. And I think I was very early, like a couple months ago, onto the SPLV trade. And if you're not familiar with SPLV, it's the low volatility trade. And this worked really well for basically all of the month of August. It just ramped up like this. And low volatility is your boring things. Some of the things that we covered already, your utilities, your staples, your healthcare, your financials, your defense names, your insurance names. So, that's looked different to me. And, that's a really nice move higher. And it just shows like what the market wanted. So I try not to I try to find what the market is looking for, and go and gravitate towards it versus what trying to spin something around the names that only I'm interested in. So I just try to keep an open mind and say, hey, I could trade financials. I could find insurance companies. I could find some utilities, and so on and so forth. So that's always my goal, is just to try to listen to the market and listen to what it's trying to tell me about, and it kind of just is threaded into what what people are looking for and what they think about the economy. Even though the economy is not the same thing as the stock market, there are people interpreting what they think the economy is going to do and then making trading decisions, right? And those institutions, right, are the ones who are mostly moving the market. So we've talked for a while now. I've talked more than Webb. I apologize, as I sometimes do that. Is there any is there any other questions or charts? Thank you guys for sticking around. Of course, how can I not bring up the K-Web?
It's my ETF.
There's
It was
still a
all
V there's still a VPOC up there that's,
yeah.
could we get one more here?
Talk about volume confirmation.
Yeah. Seriously.
Like,
I mean, look at this, Scott. I mean, you
yeah,
know, what caught me was this candle here. I didn't think that we were going to break out, that this was going to break out outside of the value area. And this is tough because not only did it break out of the value area, but it went from $30 to like 32.50. And that's a very big, that's like a 10% move, I think, if I'm
yeah.
doing my math right. But then I'm like, oh, well, I don't want to chase that, So you really had to have conviction in this and to start this early. And, so that this is the candle that kind of screwed with me a bit and why I kind of decided to hold off a little bit with taking bigger, with doing anything substantial. But yeah, I
One
mean,
thing
yep,
One thing, a couple of things are happening on this chart that you can kind of eyeball in case you're setting some stuff up. We have a VPOC right up above, right? It's
yep,
not far away. And along with it, as we get closer to it, and we've all in this room have been trading with MarketWebs enough that like we expect when we tag a VPOC, it tends to lead to a reversal unless there's just a lot of strength behind it. Well, let's see. Will there be strength behind it? Well, let's look at the volume that's happening right now. Over the past 3, 4 days, the volume has been declining. Today, significantly, right? We had a big update. We closed at the high of this whole move, and we had volume about half of what it was yesterday. And the RSI is showing we're overbought. So when that VPOP gets tagged, we're very likely to see a sell-off a bit of a relaxation, an exhaustion from this move. Now, if we get that VPOC tag on more volume than we have today, then we could be continuing to move higher. But these are the things to look at. When I said earlier, take 3 indicators that are indicating something. Well, we've got two. Volume is starting to decrease as price is going up. That's a divergence. We've got RSI starting to say overbought. And we've got a VPOC that could also say overbought if we tag it. So those are the kind of constellations to look for. If I'm looking for a trade, maybe I'm looking for a little short-term short side. Maybe buy a weekly put kind of a little bottom kind of a thing.
right. Yeah, and also like if you think that this is going to be a like a game-changing theme for more of the long term, then you probably want a little bit of digestion. And like
Yeah.
even when David Tepper was on, who's super bullish, he was like, I'll take a pullback,
Yeah.
and where how far away is this top of that? Because I think this is a very bullish looking chart.
Yeah.
Um, maybe you get some type of retracement back in here, and some of the hot money kind of comes out a little bit, and even like halfway might be something to kind of start a position in. But
Well, like a great one there is, as I was talking about earlier, I set my buy order at the top of value for the month. So if we get that sell off and we get that check back to support, you're in, and you're in at a great price.
yeah, yeah. So
Uh,
you've
yeah.
got oops. Let's see. Oh yeah. Um, Yeah, so you've got a couple levels, and this is 9% down, and this is 16% down. So again, you kind of have to think about this too, and like how you structure your trade. This isn't trading like SPY. It's not trading like Apple. It's not even trading like Nvidia. This is trading on Nvidia on all kinds of steroids. So you can't use the same position size, and you want to think about like put your like you buy 100 shares in this and and it goes down to where is that 32 bucks, so that's you lose $300. So you magnify that out. Like, how big of a trade do you want? Do you want 300 shares? Well, that means that's, if it comes down to the top of value, that's a loss of $1,000, right? If it comes back and checks back. What if it retraces all the way back to the top of value? Are you going to be okay with that type of a drawdown if you're looking at the bigger trend, right? So yeah, my thought is you kind of you do it lightly, and be patient, right? And that's the hardest thing, is to have the patience.
I like it though. I like it though. I think I am going to do that. I think to your point about patience and even the scenarios you were just describing, kind of sets up a lot about it. The way I like to trade these days, and I think that you've done this too, is that like you can put a little scouting position out, just a little nibble, like 10 shares or something like that. I don't, whatever it is
Yeah.
appropriate for you.
Yep.
It's just so that you're in it. It's on your list. You're watching all day, every day, like what the price is doing, right? And then if it comes down to that top of value or whatever, that's where you add and you take a bigger position. You say, that's where I want to go 100% of my position size at that level, right? But you're just in it, or you can kind of part your way into it, even if you're starter position you get into it now and the stock just keeps going up and up and up, you can just slowly add to it over time and not think about specific price entry points. But like, don't feel like you have to put your entire position on at the same time.
Right. Yeah. I mean, so yeah, I can't reiterate that enough, is like, just plan out your trades. If you plan out your trades a bit like that, then you're going to be prepared for for that volatility, and you're not going to freak out, because
Yeah.
you're going to know, like, okay, this is part of the scenario, right? Webb's a big Formula One fan, as well as he's gotten me, into loving Formula One as well. And when you listen to the drivers, and they communicate with their pit, what are they I'm not sure if I'm leading the question correctly, but they all have these game plans, right? And what do they communicate at some point in the race? They say, are we doing?
Yeah. Plan A or plan B or plan C, or are we throwing it all out the window?
Yeah, yeah, exactly. So, and that happens too. Sometimes, if it breaks further, like, so EM, right? So plan A would be, hey, it comes back to the top of value, and hey, I'm going to really look to start a position here, because that's also previous resistance here. So this would line up pretty well. Also, this 20-day moving average is probably going to catch up too at this point. So then you get the 20-day moving average working for you. And just as Webb said, he likes a couple different things. I like when the moving averages, so it's another indicator, line up with the top of value, right? And you've got good support there. And other people are looking at that too, who don't even have the value area. So it becomes more robust to me. But that would be plan A, right? And then, of course, you could come up with various different scenarios. But you're doing that so that, and that's the majority of times I find where either I get into trouble too, because I didn't, but the majority of where a lot of traders get into problems is because they don't even have a plan, right? All they're thinking about is gains, gains, gains. I'm in this to make money, and they're not even thinking about the downside risk. They're not thinking about a plan, and you're shot before you even start, because you're not thinking about scenarios, and you're not thinking about what you're going to do. You're probably going to react emotionally when you don't get exactly what you want. And the market likes to, you need patience. So anyway, any, do you agree, anything you want to add? And then we'll just ask for final questions.
I got nothing. I
All
think I
right.
think we've had a good session. I think we put a lot of knowledge out there.
We did, and some good. We try to make this too, where it's not just, we're not just like talking about theory, but like, where we would get involved in trades, and how to trade, how to use this to trade so that it's practical.
Yeah.
Any other a last question or anything, or any
Last
last
call.
comments, Webb?
I don't have anything else to add. I don't think.
Okay,
I
good.
think the overall takeaway for me on the broad overview is just that the market again is there's a lot going on, as you said, and we can all list for ourselves all the different things that are happening right now. And the market is kind of, there's reasons to be bullish and bearish, and there's reasons to rally 20% today and sell off 20% tomorrow, and all this stuff. So you've got to be careful. You've got to position size correctly so that you don't get caught out in an overnight move. We are definitely in this world of overnight happenings that can catch out a lot of people. So, just trade appropriate size for your tolerance and for your trades, and wait and look for those confirmations. If it's not something that you tend to look for, definitely practice that. It will help you out a lot. And just as always, remember there's a once in a lifetime trade every day in this.
That's right. All right, great stuff, Webb. Thanks again for joining us. And guys, have a great night. And we're happy to answer any further questions that you guys have. And this is obviously there's a lot of different scenarios that could play out. And we try to cover as new information comes out. We're trying to we're trying to find some of these trades and do it appropriately well. And it's fun when you get there, when you get to when you find something line up, and you get involved and it works out in your favor. So guys, have a great night and see you tomorrow.
Thanks, everybody.